CLS Weekly Market Review. I'm your host, Robin Murray, here today with Senior Portfolio Manager, JJ Schenkelberg. Hey, JJ.
Hi, Robin.
So I want to start out today by talking about the New York Stock Exchange and what happened there earlier this month. There was a shutdown. Tell us the story.
There was. We had a short-term shutdown in just a portion of the New York Stock Exchange. It didn't cover the entire exchange. But what I think is most important about it is the lessons that could come out of it. It's just a sharp reminder of how quickly things like that could happen. It really became a non-event, but something like that could happen. And there's a couple things that I think are really important. One is that we're buying underlying companies in the stock market. It's not just a pricing game, and I think people get caught up in that oftentimes when they're watching the prices move day to day. The other thing is something like that could happen, but there's still value in those companies that you're buying. But it may take time to get that value out of the companies. We could go back to using paper versus the electronic exchanges, but that may take time. So it's a really good idea to still have around 3 months worth of living expenses in cash, just in case you have to weather a little bit of an illiquid event in the market.
Okay, and moving on, I want to talk about Core Plus ETF portfolios. How have they performed this year?
You know, we've been doing quite well. When you look at us versus our benchmarks, we're slightly behind. But one of the good things that has happened this year is we added international to our benchmark last year, which meant we added it to the benchmark and to our portfolios. And so far this year, with international outperforming the U.S., that's been positive. Also, what was nice to see in the second quarter was we started to see commodities turn around and outperform, and that was very nice to see for our portfolios.
Okay, and companies are also reporting second quarter earnings right now. What does it look like out there?
You know, really, companies so far are outperforming expectations. That's excellent. The one thing that is out there, though, is expectations are negative. It's the first quarter since the third quarter of 2012 that we're expecting negative year-over-year earnings growth. But as we see companies reporting, we are seeing them come out more positively than expected. A couple of things that are causing the negative year-over-year decline are lower oil and gas prices, as well as the stronger dollar. And those are both two things that we believe could have a short-term impact on company earnings, but going forward may not have a long-lasting negative impact as companies adjust to the new environment.
Okay, all right. Well, thanks for your time today, JJ. That's it for this week. We'll hope you will join us again next Tuesday. Thank you for your time and trust in CLS Investments.